All right, good morning, everyone. Let's get going. Okay, last night's sessions in the U.S. markets, another day of rallying. Obviously, we had the big news from the ECB with the release of their interest rate policy, along with the additional measures that they took. You know, the market was fully expecting them to come in with stimulus, obviously, and they were also expected to probably do something a little bit extra on the back of that. I think they more or less came in line with maybe what the market was expecting. Didn't really go over the top with asset purchase programs or anything like that, quantitative easing, but definitely a show of force by the ECB and leaving the door open for further measures. So we obviously got a solid rally on the back of that. We had S&P 500 closing again at new all-time highs, really taking us further out from the breakout that happened around 1900, and we continue to just see this drift higher. I mean, yesterday's session was actually probably the hardest move to the upside we've seen in a couple weeks. And all the other days, we've pretty much been up 1 or 2 points in the S&P. So I mean, 12 points, which is only 0.6%, really seems like a big move all of a sudden. So just kind of the place that we are in the market at the moment, really just looking at low volatility and very little trade volumes going through the market at the moment. If we look into Asian action, we see that we had absolutely no follow-through on the back of the ECB. And what's interesting as well is in the commodity space, when we saw very little, if nothing, yesterday out of the rally. I mean, we saw a bump up of perhaps $10 in the gold price, but we couldn't really get going anywhere. Copper actually traded a little bit lower, if I'm not mistaken. Oil also came off a bit after the announcement. So we got very little out of that. So, the follow-through in Asia was also very, very muted. We didn't see anything out of the real Asian countries. We did see Australia, obviously, that traded a little bit higher. We had Tencent that was up a bit, and some of the automakers and things are up a bit in Tokyo. But other than that, I mean, absolutely nothing going on over there either. Just to show you guys an example of rates and how far they've come down and how long they've actually been low. We look at this as being a big deal. We've got the ECB deposit rate, which also obviously hit negative rates as of yesterday. The repo rate also coming down to virtually nothing, but rates have been ridiculously low for a hell of a long time now. I mean, this is, if you sit there and you look at that, I mean, since literally 2009, we've been at 0.25%. So, I mean, when in the grand scheme of things, I mean, this is it's more of the mental statement that they're making. It's more of the mindset change in the ECB than it is actually the physical change in the rates. So just keep that in mind. I mean, I think that's really important. And the market's kind of telling you that especially kind of the commodity markets and the things like that would typically react on the back of that are telling you that they're not, it's actually not that big of a deal. We also saw some moves out the Treasury market yesterday as well, kind of just following yields a little bit lower, but very little actually happening on the back of all of this. All right, today we've got a corporate action. We also don't have a hell of a lot going on today. We've got Sasol is out with its 2014 quarter 3 sales report, so keep an eye out for that when it comes today. It's really been trading well, kind of ahead of this. I think the market's expecting good report there, or cost cutting. There's definitely been some rumors in the market that they're going to do some significant cost cutting. So look out for that today. If they don't come with one or the other, I would expect the share to really correct, especially after the fine yesterday. So, but definitely a little bit of froth there over the last few sessions. All right, looking into market data today, we had industrial production out of Germany this morning, came in a little bit softer than expected. We had gross reserves here, also a bit soft, as well as net reserves soft. We had the German trade balance, which was higher than expected, and then we've got the French trade balance in just a bit. We've got Spanish industrial output. We've got the UK trade balance, and then we've got nothing until the big daddy at 2:30, which is the non-farm payrolls out of the U.S. and the unemployment rate, obviously. So, I think that's also possibly part of the reason why the markets didn't really get going too much yesterday. On the back of that, we didn't see any, significantly decisive moves after the ECB announcement yesterday. One, because it was more or less in line, I think, with what the market was expecting, but also because we've got the non-farm payroll today, and that's really kind of, to an extent, almost as important. So maybe just hanging on and waiting a little bit in the market for the non-farm payroll number today. All right. Let's get into the maps real quick. First thing I'm going to show is we're going to show a 30-minute chart of the ALSI. I haven't been showing the ALSI at all for a while now, and I'm getting ready to show you why. Because nothing is happening. I was just looking at this morning, and just looking at the range, we've literally been in a 300-point trading range. It's actually 400-point trading range. Sorry, 400-point trading range now for 12 sessions. So the last time I can remember that, I don't know. It's been so long. It's it's the kind of thing that very, very rarely happens, and that's just, it goes to show you the kind of market that we're in at the moment. Low volume, low volatility, and until that changes, I think the best thing to do is really just to tread lightly. Be conservative, wait for the opportunities, because the market will come back, the volume will come back, the volatility will come back, but as of right now, it's a lot more dangerous to play in the market in size, simply because it's drifting around on very little and acting very directionless. All right, let's look at OML. Let's look at a little Old Mutual here. If we, there's a lot of charts that are actually starting to look like this now. Notice this morning, a lot of little continuation patterns, and we've got almost one of them this morning coming up 36.40. There's definitely, in terms of closing high, previous closing highs, we closed just below that yesterday at 36.34, and definitely looks as though it can make a break out the top. Not a huge move coming, but maybe close to $2 to the upside on a breakout there. Kind of following on the back potentially of its counterpart in Sunlum and the way that it ran yesterday. We'll look at Steinhoff here. Steinhoff made a nice breakout yesterday, probably more than anything on the back of the ECB dovishness and stimulus there, which is obviously good for their European operations there. Making kind of its breakout of its second little narrowing wedge formation that we've had in its recent while, but I think we're probably going to see more or less of the same in what we saw in the first breakout here, which is a move up and then a move out to the right again, maybe a little bit more muted. I mean, I think this thing, it's just run so hard that I think it may be a little bit difficult to get guys to really pile into this, but nevertheless, it's looking like it's ready to take out all-time closing highs, and probably still has a little bit left in it. All right, let's have a look at Discovery. We had talked the other day about the level down here, and that it had really needed to drop and confirm a breakout below, and you can see there on a closing basis we just couldn't get below it, and as of now, as we sit, it's starting to look a bit flaggish, a bit like a bull flag, and looking like we could pop out the top with a gentle push higher right now, maybe above, if we can get above 91 and kind of hold above 91, which is basically a few cents away from here, then I think we may be kind of popping our head over the top, and I wouldn't see any reason why this thing can't make another attempt at 100 and back toward the all-time highs. All right, let's look at Aspen, which Aspen made an enormous breakout the other day after it broke out of consolidation. I actually think that this potentially it could be opportunity. It could be a couple of these stocks had breakouts and have come back to retest. This is a full retracement in one day, which is kind of unusual. You don't really see, but I think around the 280 level might not be a bad little place to put some risk on. if you're interested in the long side of the sector. And let's look at Mondi as well. Mondi also making a bit of a what's looking to shape up into a continuation pattern. You can see there it just narrowly took out all-time closing highs as of yesterday. We bounced beautifully off the 200-day moving average when we came down and tested. Also held on trendline support, which we were showing about probably a month ago on the longer term charts. And the breakout here to the upside really puts quite a reasonable target on Mondi here, which would be well into to the 200s. I would say it's all the way up to about 225. Especially if we can get above 200, I think that would really be confirmation to Mondi to take us quickly to about 220, 225. And then the last one we're going to look at is one that we looked at not too many sessions ago, and we looked at Rio dropping this 31 level on the 1 year, but I was looking at it yesterday on the 30-minute, and also very significant level that's set up here, as you can see. As you can see here, dropping the 3160 level, and we really just kind of flagged right back up into this level as of the last few sessions. I'd like to see how it trades against 3160 today. If it fails 3160 and drops out the bottom for you guys that are actually playing internationally, we can drop below, call it 31 and a quarter. Then I think it could be good night nurse here, and we could really see the downside play out in Rio. So just keep that in mind. Thanks a lot, guys. That's it for today.